Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for November 23rd, 2009. This is Patrick Ceresna. First off, I want to take a look at the S&P 500 using the Spider Exchange Traded Fund symbol SPY. Over the last month or more, we've been looking for a market top to develop somewhere up in this 110 to 112 focal point on the upside. We had a test up into that zone this week and a reversal bar coming out of there. But the one thing I do want to emphasize is that we still have yet to see any technical damage done to this market for us to conclude that a top is actually in place. What we would really need to see is the market at some sequence begin making lower lows than some of its previous lows, or some kind of indication that the sellers are actually coming in with some sort of force. At this juncture, even if we had another pullback and we saw another 20-30 S&P points come off on the main index, that in itself would do no technical damage to indicate that a reversal has occurred. Really, at this point, one of the forecasts that we've been calling for was a test up into the zone and creating what would be almost equivalent of a double top formation and a reversal back down to the 103, 105. That's the scenario still is in play, and that's the scenario we continue to favor at this juncture. The one thing that we want to emphasize is that if in fact all we do is get another day or two of very modest selling, and then that market reverses and actually manages to break above this 110 to 112 area on the upside, then we have to look at alternate scenarios in which there may still be one more leg higher in the S&P. At this point, we do not favor this scenario, but if we do get above that zone, we no longer are going to be looking for the topping formation at this level, and we'll have to revisit where the different projections higher will go. Next here, I want to take a look at the ISE U.S. Regional Banks Index, which is the symbol JLO. And while we've seen some markets push higher highs like the Dow Jones and the S&P, those actual market thrusts have been on very poor market breadth, and they've really been led by a few large cap blue chip stocks that have made that market push higher. But when we look a lot of the market internals, and especially when we look at a lot of these sub-indices like the regional banks, we've seen little to no follow through on the upside. As you can see over the last 2 weeks, there's been little progress done to the upside on these indices. And we continue to sort of have this the bias that these will still roll over and go through further selling. But the one thing we can't rule out at this moment is the fact that if the S&P does actually make that breakout on the upside, then in fact that this is a flag that will at that point thrust the regional banks index maybe as high as the 23 to 24 area on the upside. That is not the scenario we favor at this moment, but if the S&P starts a robust rally, at that moment we'll have to revisit this idea and see where the technical trade will be. But at this moment, we're siding with the fact that there's a smaller technical flag, which is a retracement of the last sell-off there. And if in fact this breaks on the downside and we go through another beginning of another sell cycle, at minimum we're going to be targeting somewhere in that 17 to 1775 area on the downside as our first move, especially if it breaks below that 18.5 to 19 focal point. Now that's just an initial target, but if we see much more robust, broader selling in the markets, then a retest as low as that 15 to 16 area is quite possible. Next here, I want to take a look at the ISE Sindex, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies, and we saw a very nice, clean double top formation develop around the 112 to 114 area on the upside. Subsequently, the sell-off that came there was very robust, and it actually created lower lows from the previous one, which actually is a very good indication of a broader sell cycle in this index. At this juncture, we've been working our way higher in a rally, but like last week when we identified, we were looking for at most to be capped in within this retracement zone, which is marked by the blue box. If in fact we do have this reversal, we have already a reversal candle come in there from Thursday. The one thing we do want to emphasize here is that if this does break down, we could see this index drop as low as the 93 to 96 area on the downside on the initial thrust. But again, like we were suggesting even with the regional banks, if in fact we have any accelerated selling coming in, this index could end up in the 82 to 87 zone just as easily. But we're first initially going to target just the 93 area on the downside. Next here, I want to take a look at the ISE Home Builders Index, which is the symbol RUF, and we saw a definitive rollover out of that rising flag type formation on the upside. That was led by some earnings announcement within some of the companies within the index, and we've really now seeing this accelerate on the downside. Using just standard measured move techniques, we are targeting a move down into about the 8.25 to 8.75 area on the downside. But again, if the selling does accelerate, like we talked about with the other indices, we could see the 7 to 7.25 in the downside, but that would only be a secondary target. Our first goal would be down there on the downside. The first indication that this is going to play out is a legitimate closing below the $9 area, which would actually indicate that the market is really picking up steam on that downside move. Next here, I want to take a look at the ISE Natural Gas Index, which is the symbol FUM. And it's not often that we get a very nice symmetrical head and shoulder style top formation developing, but we're getting a very nice clean one playing out right over here. The neckline of that head and shoulders formation lies right at this 95 level, just right above the focal point where the previous highs came in over the last couple of weeks. But the one thing we do want to emphasize that if this pattern does play out, we are going to be looking for an accelerated downside move in the natural gas index. The initial target for any downside trade below 95 is going to fall down in this 85 to 90 zone on the downside, just passing right through that focal point that we put there. It would be only a very weak move that would stop right in that 90 to 93 focal point. So if we do have the break of this pattern, do look for that to pass through that focal point on the downside. If there is an accelerated move, it could certainly move down to the 70-75 area on the downside, but we're again just going to target this zone for our first set of trades. Finally, just a quick chart of the ISE Mini FTSE 100 Index, which is the symbol UKX, and the UK market has had a lot of relative strength on the upside versus the S&P, and we had a very brief pop higher as high as that 540 area, but we are returning back right into this 525.30 focal point. This is a very interesting moment because, again, if the markets start reversing back up, then this could act as support for the FTSE to push higher up, even as high as the 560 area in the next thrust. But if in fact all the broader and global markets are going through a topping formation, we should see this break all the way back down to this 495 to 500 area where the previous lows were. At that stage, we can again start looking whether or not this will be a topping formation developing in here, but it'll be critical to see whether the support lines come in here right now and hold it in there. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.